Hey guys, Steven here, aka the Boiler Master. I'm drinking some coffee and doing DD. You guys know I ignore the hype and dig into the financials because I'm a numbers and charts guy, not a storyteller. So this time I'm looking into Plug Power. I was talking in some stock groups with other investors, and a guy suggested I take a look at Plug. And I told him I've looked at it before. It's not for me, it's too early, they're losing too much money for me. But he insisted that I look at it again, so I did. Took me about 10 minutes to spot the problem they're having, and I'll tell you guys, it's a big one. I honestly see their share price crashing even further, like really bad. But spent a little bit of time looking into it, figured I might as well make a video and share it, see if anybody else is interested. So I can tell you guys in about 30 seconds what's going on, but I'd rather take a few minutes and show you so you'll actually understand what I'm talking about and where the information came from so you can verify it yourself, and hopefully the longs and fanboys of Plug won't overreact and hate me for this. It's just legit DD, guys. Taking the financials, looking at some math, charting some things out, see where they're going. So we'll get into it, but like I said, verify and do your own DD because I'm not a financial advisor. I'm just a guy that likes coffee, DD, and sharing his personal opinion. So don't make any investment decisions based on anything that I say. So Plug, what's going on? Well, the share price right now is $3.25. It's down about 61% over the last year. In fact, if you zoom out further, it used to trade around the $20, $30 range for a while and even saw a share price upwards around 70 bucks a share. So obviously it's been dropping for a while, several years, but it still has a market cap of 2.4 billion. So let's take a quick glance at the financials and see what's going on there. First thing I saw is their net loss last year was 1.4 billion. That was up from the previous year's loss of 724 million. So things look to be getting worse. But they are a growing company, so take a quick glance at their revenue and see if that growth kind of explains the massive losses, but honestly it really doesn't. They did 891 million last year, which was up from 701 the year before. So last year they increased sales by about 200 million, but their loss increased by about 700 million. Just how, So, but that's not the real issue. It just explains the situation so you'll understand what I'm about to get into. So losing this much cash, $1.4 billion, first two things I'm going to think about is what's their current cash position and how bad are we talking on dilution. If we get into the quarterly report for Q1, we can first confirm that Q1 losses are still substantial. They were 296 million, and their cash position on March 31st was only 173 million dollars. So basically, they had enough cash to cover operations for only about 2 months. That's not even a full quarter. So they need cash. And where do you get cash? Well, typically debt and dilution. If we look into recent filings, it shows that March 20th, which was during Q1, they issued another convertible note for 140 million, but you look into that and it looks like it was basically just a conversion of a previous convertible note, and it didn't actually add any cash. It pushed the due date out, and it looks like the old note was at about 3.75%, while the new one's at 7%. So basically push out the due date and double the interest rate. That sucks. But if you look at the balance sheet, they have hundreds of millions in debt, but not enough to be covering their losses. So a lot of convertible notes that can convert into shares, but that's not how they're covering losses right now. So let's look at the dilution, and that's the other main option for raising cash, and that's where the serious problem becomes obvious, guys. So the filing shows outstanding shares. If you get into the actual the quarterly reports or the annual reports, they'll show you year by year what the outstanding shares were. So I went ahead and put down the last 3 years and the current shares right now for 2024, and I did the math. You can see 2021 to 2022, they only increased shares by about 14 million. It's not bad at all. 2023, they increased by 17 million. But so far for 2024, and we're only in May, not even halfway through the year, they've already issued 117 million shares. That's already like 7 times the amount of dilution they had last year, and Q1 still only had enough cash to cover like 2 months worth of expenses. So what the hell's going on? And guys, this is what I refer to as the death spiral. The share price crashing causes dilution to explode. So what do I mean? Well, Plug was losing a fortune every year, but they were getting by with minimal dilution because their share price was so high. It used to be $20 and $30, even $50 and higher. It was easy to raise cash back then, but now with a $3 share price, it isn't so easy. It requires us selling a hell of a lot more shares. So if you look at it, Q1 loss was just shy of 300 million. So 4 quarters of that rate would be about 1.2 billion loss for the year, which is about what they lost last year. So if you need to raise 1.2 billion in cash to cover operations at a $50 share price back when that's what it was, that would only require selling 24 million shares. Sell 24 million shares, raise $1.2 billion. That's not a bad deal at all. But they're not at $50 anymore. At a $3 share price, about where they are now, that same 1.2 billion you need to raise would require selling 400 million new shares. That's a massive amount of dilution for a company that started the year with only 625 million shares. So 625 to over a billion, and we're talking over 60% increase in shares in a single year. They've already increased 117 million this year, and they're at about 744 million outstanding shares now. Looks like they're heading towards a billion, and we're talking pretty soon. So the domino effect. What happens when the dilution gets out of control, guy? The share price crashes even further. An even lower share price means dilution will be even higher. And we can actually calculate out the effect of dilution. So right now the market cap is about 2.4 billion. You divide that by the current outstanding shares of 744 million, and that's where you get your share price. It's 325 a share. So if the company's value remains exactly the same, they're valued at 2.4 billion today. Let's say they're valued at 2.4 billion a year from now, but the outstanding shares increased by 400 million for the entire year. Then we'd take that 2.4 billion valuation divided by what would become a billion, 25 million shares, and you get a share price of $2.34. So that's another 28% downside from the potential dilution over a year's losses. Going from, we're already at 744 million, we get to just over a billion. Well, you calculate that into share price and we're down around $2. So what happens next year? Well, they have to raise more cash around a $2 share price instead of a $3 share price. And if they need to raise another 1.2 billion cash at a $2 share price, well, now that's going to require selling 600 million more shares. So you guys see how the dilution is starting to spiral out of control since the share price has crashed, and how that's going to push the share price even lower? It's a domino effect. It's creating a death spiral. And if this continues, the share price drops below $2, guess what? Then everyone's going to be talking about a reverse split. Plug trades on the NASDAQ, which requires the stock to maintain a minimum share price of $1. If they drop below that for too long, they get delisted from the NASDAQ, and they can't do that. So just the fear of a potential reverse split is going to cause a lot more people to freak out and sell off, pushing the share price even lower, and sentiment will be as bad as ever, and that will only make the share price crash even further and the dilution get even worse. So in my opinion, Plug either needs to turn their financials around immediately or do something that causes the share price to explode again. But neither look like it's going to happen. Their net loss is only getting worse each year, and the share price may have found a local bottom, but it's far from bouncing back above the $10 or $20 range, which would help them out on their dilution problem. So I doubt that then either one of those happens. The dilution that's coming and currently happening, already 117 million shares issued this year. The share price is going to have some ups and downs, but it looks like it's only going to continue further down in the long run. So that's my take on Plug. I looked into it because somebody asked me to. Well, actually practically begged me to. But that's as far as I got. Massive red flags right out of the gate. They can't sustain operations without raising a billion plus a year. And with this share price, they're just going to dilute everyone into oblivion. It's going to be billions of shares soon. So I figured I might as well share my opinion on it and what I looked into. Now, what am I doing? I'm not a big shorter. I really don't like to go short positions on stocks, so I'm not taking a position in plug at all. I don't currently have a position. I have swing traded it before, but just swinging day trades on it, playing the charts. But I don't have a position. If I was going to take a position, I would probably look at put options with maybe an expiration around December next year into 2025. And I'd be hoping this situation plays out and they're forced into a reverse split over the next 18 months and that share price is just going to crash even further. But that's just me thinking out loud. My opinion doesn't mean anything because I'm not a financial advisor. Just a guy sharing my personal opinion for you to consider and research yourself. But if you guys have any other stocks you'd like me to look into, drop them in the comments. I'll see what I can do. But leave me an actual note of what's going on with the company and why and what you want me to look into. Don't just drop 19 tickers down there. But if you guys are looking for more DD, subscribe to my channel and think about checking out the latest interview I did a couple weeks ago with the CEO and CFO of an extremely high growth OTC company not a lot of people know about yet. Thanks for watching, guys. Catch you in the next one.